Hey everyone, so the stock market has been very choppy, right? Everyone knows this. All traders know this, day traders and traders who are in a long position. It's going up, it's going down, and sometimes it's news based. The shutdown hurt the stock market a lot, but only after it dragged on for a long time. But everything changed when the holidays started to come around. Thanksgiving is coming up. A lot of people are going to be traveling. People won't have money to buy food for Thanksgiving or maybe even Christmas. So guess what happened? They made sure the government opened up just in time. So now, what's going to happen with the stock market? Let's look at this chart. So as you can see, this is the Qs ETF. The market hasn't been looking too great. It was doing well right here in end of October, but then it came to a halt right around October 29th and then came down November 4th, and it's been stuck at this 627 QETFs. And now it's back on a downtrend. So people thought that the market was going to jump up, pump after the government shutdown was over. That's what they wanted you to think. They wanted you to buy calls, buy shares just before the government shutdown ends. And retail thought everything was going to be good. But the institutions knew already that it's not over yet because we got to see these data numbers. The data numbers is key on how the economy is flowing and if the stock market will continue to go up. Just because the government opens back up doesn't mean the stock market is going to go back up. And as you can see on the MACD, on the daily, we're still trending downward. RSI still trending downward. And on the chart, we're also in a downtrend. We're not out of hot water yet when it comes to the stock market going back up again. So yes, there's always manipulation in the charts. There's manipulation in the news. That's why you can't always trust and hear what you see on TV or what you read by experts. And here's some news right here. The federal government is back open. Now what? We don't know. We got to see the data reports. But when we want to see the data reports, what happens? The White House says October jobs and inflation data may never be released because of the shutdown. So now they're still blaming each other, even though the shutdown is over. Key economic reports for October may not be released at all because of the shutdown, a senior White House official said Wednesday. Release of important economic data has been at the forefront of Wall Street concerns as the shutdown dragged on for more than 6 weeks, the longest in history. As I said in previous videos, the reason why the stock market was still going up when the shutdown was ongoing was because it was already priced in. And they thought the shutdown wouldn't last as long as it did. They thought it would last maybe a week or two, and then it's back open again. But it lasted longer than expected, and things started getting crazy at the airports and so on. And here's how they're blaming each other. The shutdown made it extraordinarily difficult for economists, investors, and policymakers at the Federal Reserve to receive critical government data. They may have permanently damaged the federal statistical system with October CPI and jobs report likely never to be released. All that economic data released will be permanently impaired, leaving our policymakers at the Fed flying blind at a critical point. Among the most important releases are the monthly non-farm payroll counts and the Consumer Price Index, both of which come from the Labor Department Bureau of Labor Statistics. Other data impacted include retail sales, import, export data, as well as consumer spending and income. So yes, these data reports are very important. The shutdown, we needed it open, but we needed it open because everything was going crazy. The holidays were coming up. Airports were very, very busy. Flights were being canceled. And the data reports, pretty much we were in the fall. Don't know what was going on because we had no numbers. Now the government is open. Data reports, let's have them, but we're not going to get them. As you can see in the after hours, we were holding up pretty good. We knew the shutdown was going to end. We're going to get data numbers, and everything's back as normal. But that was all manipulation because they already knew that the data numbers weren't going to come out, and the pre-market looked bad. And then you see during the market hours, it's trading downward, downward, downward. And on a 5-minute Qs ETF, looks like we have some kind of support, but that also could be manipulation because we're still actually in the downtrend, as you can see right here. The moving average is pulling down. And we do have some positivity for the stock market is that NVIDIA earnings is next week, going to be on a Wednesday. And I think we have earnings for Target also, maybe Tuesday or Wednesday. So we will get some reports on that and we can have some kind of data, right? NVIDIA is going to be important earnings, but at the same time, the earnings may show some decline because China sales. But let's hope everything else Nvidia is doing will offset that. But we'll see. But that is some positivity to hold on to going into next week. And of course, when you type in stock market crash, let's see what we get. Because, news articles love to jump to conclusions, right? Let's see. Is the mother of all stock market crashes on the horizon? So, hey, they're trying to get you worried, right? So be careful. Forget the AI race. Build income first to survive the next market crash. It's trying to say that, a market crash is coming up. No one knows. No one knows. 3 Warren Buffett tips to get ready for a stock market crash. Now, if you ask me, is the stock market going to crash? No one knows. But is the sentiment very good with AI and tech stocks? I'm not going to say yeah. I'm not going to say no. I'm going to say it's kind of in the middle. I think we run up a lot for AI and tech stocks, and it's a possibility that it needs to come down a little bit. Here's the weekly for Nvidia, and you see that 2 weeks we're in the red, and those are some pretty strong candles showing that a lot of people are selling. Now let's check the SPY ETF and see how that looks. SPY ETF, kind of the same thing. We have 3 weeks red candlesticks, and the uptrend is starting to look flat right here. You can see we have an uptrend right there, starting from here to there, and it's starting to get closer and closer to this line. If it was still an uptrend, it would continue like this. But now we're starting to get closer to this line right here. 3 weeks red, and if next week we start to go below this blue line, a downtrend could be coming up. And will that be a crash? No way to know just yet, but a correction, maybe. A downtrend, very possible. Like, for example, Thanksgiving comes around, Christmas comes around, data reports look good, people are spending, no one's having problems. There you go. We can continue up. So I'm assuming that we won't get any data reports until sometime next week. I will check the schedule and see where our first data report will come at, and I'll make a video about that as well. But it's going to be hard to create another uptrend for the stock market in general until we start seeing data reports. So be careful about what they're saying, what the analysts are saying, because there's no way they can conclude a downtrend or a crash or an uptrend or a pump in the stock market without seeing data reports. It's just not happening. So remember, it's going to take some time for the economic numbers from the data reports leak back into the stock market. And once the stock market starts to go up based on the data reports, we could start trending up again. If the Nvidia earnings is good, definitely start going up some more. All right, everybody, if this is your first time here, subscribe, like. I analyze the stock market in general. If it's going to go up, is it going to go down? I analyze the news, economic news, stock market news, and I do some stocks as well, if they're going to go up or if they're going to go down. Take care.